What's up, team? Give me 1 second, guys. I'll be right back. Yeah, let me know what you guys think about the Disney earnings call. It's going to be today. Market has been dropping pretty drastically if we look at it. There's the SPY. It's at 394s. So not looking that great. We are green today, which is good. And we'll see if it continues. Let me go ahead and get the music going. Let me know if y'all can hear the music as well. You should be able to. All right, guys. Bullish or bearish on Disney earnings? Yeah, man, 8.3% inflation absolutely obliterated the market. Tough time. All right, baby, love you. I don't see why today's market could affect Disney's earnings. Those perhaps later. Yeah, well, today's market's not going to affect the earnings, but today's market is certainly dragging Disney down. You know, Disney is a large cap company that follows the market heavily, and so when the market's down, Disney's going to be down as well, and that's just pretty standard. Let me know if y'all can hear the music. Music good? Where's my soda, man? I grabbed a drink. Bro, my ears, let me know what you guys think. My ears are ringing, man. My left ear is ringing. So it can't be good. Ears ring can't be good. Disney breaking lows. Let's see what the actual market is doing here. Here's the SPY on the left. So SPY on the left is breaking lows as well. Pretty tough for the market. Good on music. All right, nice. All right, I'll be right back. I gotta go grab a soda. I'll be right back. It's a sugar-free stevia soda for all my health people in there that are gonna get on me for drinking soda. Hey, we'll be right back. All right, guys. Somebody may be talking about you, John. Hey, maybe, bro. I don't know, man. They say that medically, if you have ringing in your ears, it could mean hearing loss. Now, I went to get my hearing checked less than a year ago, and I'm definitely one of the top three hearers in the world right now. But they honestly really did say my ears were solid the last time. I got my ears checked less than a year ago because I was having similar type of ringing. And I passed every, like, I didn't miss one on the hearing test. So she actually said that my hearing is above average. Top three hearers in the world right now. Seriously, she did say my hearing was above average. So it's good that I'm not losing my hearing, but weird, man, weird. Yeah, SPY breaking lows down to 293.70s. And we're green on the SPY. We shorted it today. Or no, we're red on the SPY. We're green on the Q. Maybe it was green on AMD. Oh yeah, we're green on the Q, and we're green on AMD today. And so, you know, we made money on both of those. But yeah, bro, brutal market, dude. Brutal market. Are y'all buying this dip? Let me know. No, not really any fly. We flew maybe a few weeks ago. AMC touched $10 today. GameStop down to 86. Apple at 146. I might buy the dip, bro. It depends on what stock, though. I think if you're going to buy these dips, you got to be especially selective over the stock you're choosing to buy. And so you just got to be careful, bro. You got to be careful with the dip you choose, you know? What other earnings do we have today? I know we got Disney. We got like one or two other good ones. Let me see. I know I got it somewhere. There it is. Rivian. Oh, we got Rivian earnings today. Maybe we should cover the Rivian earnings instead. Let me see. Yeah, I think we'll cover the Rivian ones instead. Rivian will be more interesting than Disney. Let me see. What do you guys think? Rivian or Disney? I think I covered Disney 4. Rivian will kill Tesla very well by the big dogs on the dip. I like Amazon and Google to hold. Disney earnings? Maybe. All right, we had Rivian earnings. We also have Dutch Bros, BYND, ZipRecruiter, Fossil, Sonos, Bumble. BYND, yeah, BYND as well. So most of them are going to be dropped after 4 p.m. Ramon. So most of these, y'all do me a favor. Everybody do me a favor. Hit the like button. That's a good way to help support the channel. Hit the like button. Disney to 55. If it does, I'm gonna buy that, man. I think people hate on. Yeah, and so, the only time I went on a plane, so I wanted to make sure it was cool with Mitch. I went to Mitch's wedding that's why I was in Denver. For you guys that remember my Denver trip, I went to Mitch's wedding. Mitch with Benzinga, old friend of mine. And so I went to his wedding, and it was fun. We had some fun in Denver. But that's the last time I flew. And so I don't know if that's why my ears are ringing or not. But that was like 2 weeks ago, 2.5 weeks ago. And so, you know, I don't know. I don't think that's why. I think it's a little bit too past that for that to be the root cause of my ears burning. But who knows? Honestly, I might short the SPY a little bit here. Yeah, we're shorting the SPY. I mean, screw it. All right, nice. Short is doing well. Testing lows. We're going to add some more to this. 50 shares. Yeah, it's probably earbud related. That's probably true. All right, I really like this big up wick on the 5 minute. But I don't know if it's as big on the 1 minute. Okay, we can cover into that. All right, so we're covering into the market break. We'll maybe add a little bit more to this. See if we could add a little bit more here. We're up about $10 on this trade, so it could be better. Nice. Breaking some lows again. We'll add to this. Since we're already so nicely green, we'll add to it. Cover a little piece there as the break happens. So it looks like my short strategies work good later on in the day too. All right, we'll cover there. Big down wick there, which isn't really good. We'll see if we pop up here. We don't have too much time left for the market even being open. Breaking lows again. Man, maybe I should have held, but we had a good day today. I mean, we're up $90 or so today. So, you know, we're up pretty heavily. I could try to push. Should I push for $100 day, guys? Let me know. Should I push for $100 day? I could. Basically, should I keep trading? I'm about $12 in. Here's my P&L right now. This is my P&L currently on the day. So should I push for $100? All right, so SPY breaking lows. Disney starting to test lows as well. Should I add on this pop and short into some more? We only need about $12 to hit 100 on the day. So we've actually been making money in this market too. Mostly short. You know? What's up, JB? What's up, dude? But yeah, market's breaking lows again. Rivian breaking lows again. Or not Rivian, Disney. I see some downward pressure here. We're going to add a little bit more. Maybe we could poke around. We're not going to lose too much if we lose. Double or nothing. Not me, bro. I'm a small and steady trader. You know what I mean? Like I said, my logic is like, look, I can swing for big gains, right? A lot of that, like, if you have less than like 20 or 30,000 and you're trying to make over $1,000 a day, you are gambling your money. You know, you are gambling your money. And so I choose to just be safe and slow, because even if you make money in one specific trade, you know, after that, even if you make money on one specific day, usually trading like that will eventually cause you to lose your account, you know? And so using one isolated incident is usually not the right move. It's about long-term profit, and we're green on the day, and we're green on the year, you know. And so we're just going to keep trying to trade like we are. All right, so 50 shares. Shorting the SPY here. Ideally, we'd like to see a rejection here. This can be a stop loss level for us, but we're not going to hold it super long either way. And we'll probably have to cover here, which is fine. You know, we're about to break even. This is about where we were beforehand. Watching AMD, though. AMD has been a money machine all day to me, though. $12 minutes, guys. 12 minutes. Number 3 in the world. Hey, you know it, bro. You know it, man. That's me. All right, we're going to see how long we do. We got about 2 or 3 minutes, and if we don't get any views, we're going to switch to the Rivian stream. Because Disney, it might be too big. There's too many people covering it, you know. These earnings streams are really just about how many views we get. If we don't get enough, it ain't going to be worth it. You know, we can cover the earnings call on both. So we could actually cover both of the earnings calls if you guys want us to. Let me know. All right, so wow, man, look at the SPY just dump down. Crazy, crazy. Huge drop at the SPY. Brutal drop at the SPY. Wow. All right, we're actually shorting AMD, guys. I mean, the market's breaking down. I mean, what do you guys want me to do? We're shorting AMD. Beautiful gain so far. Over $90 in profit just on AMD alone today. I mean, I don't know what you guys want from me. I mean, I might as well do this. Look, we're going to cover here. Made all our money back. We're almost there, guys. We got 10 minutes. We're up $94 on the day. Still dropping. SPY still breaking lows. And again, I don't mind capitalizing. What did Red Blocks down to $3 a share. SPY bouncing up a little bit here. Disney still at 105. AMC's down hard, yeah, bro. Kind of nasty drop for everything today, dude. Just rough, brutal drop. What did Rivian do? I mean, I'm curious to see what Rivian is. Genuinely curious. Rivian at $20 a share. It's dropped with everything else, you know. Let's see what the market does. Let's see if the market stays down or what, you know. Rivian's kind of coming back here, you know what I mean? So I don't know, man. I'm kind of tempted to take a peek at that one a little bit more than Disney. I mean, Disney looks good, but I don't know. Man, market's breaking down even more, guys. Look at this. Rivian's starting to pump. Part of me thinks I should buy Rivian now. I don't know. SPY calls. I mean, the market's down enough. You know what I mean? Who knows? 7 minutes until the market closes, guys. 7 minutes. All right, SPY just broke lows again. SPY breaking down here. Wow. SPY just broke lows again. Wow. Did I break 100? Hey, let me see. I broke 100, guys. Hey, $100 day. That's what you love to see. I mean, market's breaking down, and that's all right, though. So we broke $100 today. Shorting mostly, you know. Don't judge me too hard. SPY breaking down again. Rivian's kind of ramping up, though. So we'll take it. Yeah, I think the markets are oversold as well, but who knows, man? You know, you really never know, bro. You really, truly never know. Rivian ramping up, though. All right, guys. So we're going to cover the Rivian's earnings call. There's not much of a reaction here. So we're going to just cover the Rivian earnings call. I think it'll probably be a little bit better. And if it doesn't work, if we don't get any views for this, we're just going to close it down. I think most people are paying attention to the drop that we're getting in the market more than anything else. And Rivian is kind of ramping up. I don't know. Let me know what you guys watch. We're watching Rivian. All right. What's the other earnings today? We got Dutch Bros. All right, so here's Disney. Here's Rivian. Rivian's starting to ramp back up. Let's see what the earnings show up for both of these. We're going to watch both Disney and Rivian. Y'all do me a favor, hit the like button as well. Earnings should be happening pretty soon. We're going to end this poll. We did an earnings poll for Disney, and now we're going to end this one. We got about 50 votes. Mixed results. Bullish or bearish on Rivian numbers? All right, so we just did another poll. Are you bullish or bearish on Rivian numbers? So the bell's about to ring now, and the earnings should be reported pretty soon here. And so let's be ready for it. We got Benzinga both up as well. We got both Benzinga and TD Ameritrade up to see what these earnings numbers are going to be. Rivian stock dives into record low territory. Ford disclosed it sold more than $200 million worth of shares. So Rivian tanked after this. Vote on the poll right now. We got 10 votes on the Rivian earnings. 50% are they were completely split. So 50-50. I still got these burning in my ears, man. It might be from my headphones, bro. All right, so Rivian is closed. Here's Disney. Disney up to 105. So let's see what the earnings show for Disney here. Let's wait for these numbers. We got Rivian and Disney side by side. All right, so we got mostly Rivian bears here, which I guess is to be expected. We're gonna wait for the Rivian numbers to come out too. The thing I like about Benzinga is because I can put both of these things up. Like, check this out. Like, this is the dope part about Benzinga, okay? If you want to see why people use Benzinga, look at this. All right, so if I want to see which earnings drops fast enough, I can put up Disney, I can put up Rivian here both. And I can go to news, and I can just wait for these numbers to drop. Super useful. I got signals, movers, charts I can look at, watch list building. I can look at news, and I can just add news here. I can go like this, watch. I can go like this. I can go Disney and Rivian. I can see when they drop both of them like this too. Either way is fine. But if you want to check out Benzinga, try them out in the description. Super useful tool. And you can try them out for free for 2 weeks without even needing a credit card number. So check them out. Still waiting for the numbers to be released. We haven't got anything yet. Hey, what's up, Isaac? My man. What's up, brother? Disney up to 105 post bell. Rivian at 20.7. Vote on the poll. Rivian, bull or bear? Earnings about to drop right now. Still waiting on these numbers to come out. And if you want to check out Benzinga, here's the link. Super useful. All right, so it looks like nothing has dropped for either of these yet. Disney up to 106 post bell, though. I tend to be one that thinks Disney's very cheap right here, too. I think people really hate on Disney because of their political stuff going on, but I think that Disney will be fine, and they own everything. They own ESPN, Star Wars, Marvel, everything you can think of, they own. Pixar. And so people can knock on Disney for political reasons, and I get it. I understand. But, like, in the reality of it, they're not going to fail. They're not going to be under $50 a share. I don't think ever again, and I think they're just going to keep going up over time. You know. And again, if you could disagree with that, let me know. This earnings call for Disney, they're going to be heavily looking at their numbers in terms of streaming, I believe, their subscriber count numbers, all that stuff for Disney Plus. Rivian, we're going to be delving into a little bit more detailed information, but we're going to wait and see. Disney, nothing out yet. Rivian, nothing out yet in terms of earnings. Just waiting. Generally speaking, they'll come at least 15 minutes after the open or after the closing bell. Hey, nice, Eric. All right, so Disney tanking at the closing bell. Disney absolutely dropping. It looks like they were released here. We're waiting for the actual numbers to come out, but Disney is absolutely tanking right now. And now it's absolutely ripping up. It dropped to 100 and it went right back up to 111. That's crazy. Okay, so Disney posted second quarter adjusted EPS of $1.08 per share. Second quarter continued EPS is 26 cents. Disney Plus paid subscribers is 137.7 million, which is actually really impressive. It's not that far behind Netflix. Second quarter EPS for Disney was 26 cents profit. Second quarter net was 470 million. Second quarter revenue was 19.25. So Disney posted second quarter adjusted EPS of $1.08, beat the $1.07 estimate. Sales of 19.25 billion, beat the 18.88 billion estimate. Whew. All right, so those are the numbers for Disney here. We're going to show you these right here. These are the numbers. We're still waiting on Rivians. So we're still waiting on Rivians. And it looks like switching to... still waiting on Rivians. No big reaction yet. I mean, again, they posted second quarter adjusted EPS of $1.08, beat the 107 estimate. Sales of 19.25 billion, beat the 18.88 billion estimate. So better than expected second quarter EPS and sales. And Disney is reacting mixed to this. It's not crazy big reaction. It's not terrible either. All right, so we're at 108s for Disney. So it looks like they're, for the most part, reacting positively here. Disney up to 108s. Still waiting for the Disney numbers, or the Rivian numbers here. Sorry, we can put the most of these numbers here. Hold on. All right, so here's Disney's full numbers right here. You can see Disney reacting positively to this. Their total paid Disney Plus subscribers as of April 2nd are 137.7 million, up 33% year over year for Disney, which is good. Obviously good. Rivian is dropping right now. Rivian's dropping. I don't see anything for Rivian yet. No numbers have come out yet. So for Rivian, still waiting on those numbers. But again, you can see the Disney numbers down here. You can see these Disney numbers. This is what Disney's showing right now. And Disney currently is moving up to 108s. Looks like my headphones are dying. Plug these in. I forgot to plug them in overnight. So Disney Plus subscriber info, they are up to 137.7 million, up 33% year over year. Still waiting on Rivian numbers to come out. I don't see anything yet for Rivian. But yeah, Disney subscribers are up 33% year over year. Their entertainment distribution segment is up 9% year over year. And product segment is up 100% plus year over year. Yeah, man, I've been preaching about a Rivian dip buy, or not a Rivian, a Disney dip buy for a while now, and it looks like I was right. Yeah, I tend to be a big Disney bull, bro. I'm a big Disney bull, man. And Disney, regardless of their political affiliations, like seriously, regardless of any of that stuff, I think Disney is a money-making machine that owns everything. Rivian dropping more. Rivian dropping more. Rivian down to 1890. Still don't see anything here, but we're getting big drops pre-earnings, so nothing's out yet for it. Rivian tanking, Disney moving up. All right, so Rivian bouncing back up to 20.5. Still don't see anything yet coming out for Rivian here. I'm trying to see what time both of these are. I see the Disney earnings call is scheduled for, let's see what time this is supposed to be. Let me pop this out. And again, I'm using Benzinga here. Benzinga is super useful for this. Here's the Challenger. Here's the earnings. $4:30 p.m. is when Disney's is, so 4:30 p.m. So in about 20 minutes, Disney's earnings call is going to be in about 20 minutes. Rivian's earnings call is going to be at 5 p.m. So we could probably cover both. Rivian popping up here. Still don't see any actual reason for it, but Rivian's popping up. All right, so guys, Rivian is up there. Disney breaking highs at 112. All right, so Rivian just dropped its numbers. Rivian did just come out. Rivian dropped first quarter EPS. Here's Rivian's numbers. Rivian dropped first quarter EPS of $1.77 loss, missed the $1.44 loss estimate, adjusted EBITDA loss of $1.14 billion versus the loss of $396 million in the same quarter last year. Production is at 2.553 thousand, so about 2.553 million. Or no, that's 2,500, right? All right, so yeah, production is only about 2.55 thousand. Not very much. Bullish or bearish on Rivian? Bullish or bearish on Disney? Let me know. Disney flying. Rivian is actually up as well, surprisingly or not. Rivian missed EPS or earnings. Rivian didn't meet their expectation in terms of adjusted EPS in first quarter EPS. They put in they missed it by about 23 cents. So they missed first quarter EPS by about 23 cents, yet Rivian is still green on the day. Rivian at 21s, a little bit under 21s now. But yeah, Rivian missed their numbers. And this is why Benzinga is useful, guys, just to throw this out there. This is why Benzinga is useful, okay? I can see exactly what's going on for both Disney and Rivian at the same time. I can type in Disney and Rivian. I can add anything here. If I wanted to add, what's the other one with earnings today? Bros? Dutch Bros, I can add that one too, and we can see that when it drops. Looks like they're not out with anything yet. And so pretty useful here. Check out Benzinga. Rivian is up, which is freaking crazy. I mean, I guess they put in an adjusted... They put in a higher than last time adjusted EBI TDA loss. Their adjusted EBI TDA loss is $1.14 billion versus a loss of $396 million in the same quarter last year. So much worse loss relative to last year too. But Rivian is up. Rivian is up on this. Strange is this is strange. Rivian reaffirms their fiscal year 22 guidance. I guess this is why they're up. Rivian reaffirmed their guidance. They reaffirmed their fiscal year 2022 guidance. Let me add this all. I'm going to add it all to the same thing so you guys can see everything here. All right, so we're going to add this to the same thing. Production of 25,000 units. So here's their full numbers for Rivian. This is Rivian's full numbers. They put in first quarter adjusted EPS of $1.70 loss per share, missed the $1.44 loss per share estimate. Adjusted EBI TDA, which is earnings before interest, taxes, depreciation, and amortization, loss of $1.144 billion versus a loss of $396 million in the same period last year. They put out a production of 2.55 thousand, which is only about 2,500, which is not very much. Fiscal year 22 guidance for adjusted EBI TDA, which is again earnings before interest, taxes, depreciation, and amortization, loss of 4.75 billion, 25,000 production. So they reaffirm their fiscal year 22 guidance. And yeah, we'll see what happens here. Let me know. Vote. Oh, wait, does the firm have earnings today too? Man, we're missing some of them today. I thought I saw a firm. It was at $80. Yeah. I remember this earnings call right here back in February. Huge drop. Firm ain't doing that great either, man. Brutal earnings season. Brutal market. SPY broke. I mean, we made over $100 today, which is great, but all right, guys, Rivian breaking highs, technically green on the day. Still moving up here for Rivian. Rivian technically green on the day now, just broke over the previous closing price, hit $23 a share for Rivian. So Rivian is running on bad earnings. Just to put this into perspective, worse than expected first quarter EPS, almost 3 times the loss that they put in. Their adjusted EBI TDA loss is almost 3 times what it was in the same period last year. It's $396 million last year. Right now it's $1.14 billion. Production is only about 2.5 thousand, and we're breaking high. So hey, we'll see what happens. Weird, strange market. Strange market. Let me know what you guys think. Rivian, bull or bear, and yeah. We got the Disney earnings call that's going to be in about 12 minutes. We'll cover that maybe until the Rivian earnings call. But man, hey, Rivian's ripping up. It's at $23 a share now. Crazy. Oh, Affirm is tomorrow. Got you. Okay. How's the crypto market? I can only imagine that Bitcoin is back under 30K, if I remember correctly, right? Checking out Bitcoin now. Yeah, Bitcoin's at 29.1 thousand, man. Brutal. Ethereum down to 2,100. I mean, I'll put it this way, okay? Here's the reality, right? And Elon Musk famously said this a few days ago. All right, is that if you want to see whether it's time to sell things or not, and again, I'm going to preface this with saying, look, I have no idea what anything's going to do. You know, I'm not an investment professional. I'm a huge stock dummy, okay? Don't listen to me, okay? I'm a jerk. I'm a dummy. I don't know what I'm talking about, right? But with all that said and out the way, don't sue me, number one. Number two is that Elon Musk said a few days ago that when you know something is truly weak is when the market is doing okay, but it's still going down, right? Most of this stuff in both crypto and Disney and all that stuff is trending with the market. You know, the market is dropping, and so Bitcoin is dropping, and all this other stuff is dropping, and Disney is dropping, and DraftKings is dropping, and everything else is dropping to follow it, right? But it's following the market, as opposed to when something is truly weak, whenever it just continues to drop, regardless of what the market is doing. And so I think the true test of a lot of these stocks, Disney included, is how they're going to respond when the market does well. If the market does well, does Disney go up consistently? And how all of that works. I think that's the true test. Yeah. I wasn't able to. Yeah, you can. Bull or bear on Rivian? Let me know. Bumble report, this will pop and drop. Hey, let me know what you guys think. We got almost 200 people here, so hey, hit that subscribe button. You know you want to. They also have the crazy Luna crash, and if you want to know more about this crazy Luna crash, we did post a video on it earlier. I couldn't get my redirect working, and so we do have a crypto channel. It's a much smaller channel, of course, but we do have a crypto channel, and we detailed exactly what's going on with this Luna fiasco, this Luna crash that happened. I suggest you all go watch it. I'll consider a favor if you go subscribe to the crypto channel, watch this video, and yeah, we're going to keep covering Rivian and Disney. Here's the inside look at the Luna crash. Go check it out. Bros is out. Huge drop. So Bros dropped their numbers as well. Let's see what those showed up. Bros tanked as well, bro. Rough market, bro. Rivian bad earnings drops or goes up. Rivian bad earnings goes up. Bros, pretty big substantial drop here. Down about 30-something%, it looks like. Bro, my ears are ringing like freaking crazy, bro. Could it be sinus related? Should I like try some Afrin or something? Yeah, I'm a bull short term. Right now, like people like to throw around the word dollar cost averaging a lot. People truly throw out the word dollar cost averaging a lot, and I get it. You know, I get it. It sounds good, right? But if you guys don't know what dollar cost averaging is, dollar cost averaging just means periodic buys over a specific amount of time, regardless of price, right? So, like if you want to average it in, you know, you buy it. You plan to buy. You plan to make 10 periodic purchases of shares every week and a half. You know, every week over a 6-week period, you make a purchase regardless of price of a specific stock. That is dollar cost averaging, right? The goal of dollar cost averaging is to curb volatility, right? I think right now's market with so many big drops is a beautiful time for dollar cost averaging. I think the really, really smart traders are finding a lot of discounts and using dollar cost averaging to get safer averages and holding for a few years. It is a really smart idea right now. I think a lot of people did it in 2020. I still think it's probably a really smart move right now. Of course, I'm not saying you should buy any of this stuff. I have no idea what anything's going to do. Please don't copy me. But I think dollar cost averaging makes sense, especially with what we're doing here. Disney just dumped under the VWAP. Under VWAP, big dump. Came right back, which is strange. Rivian pulling back to 22s, trying to hold. It means adding to a loss. Hey, it could. Bro, my ears are ringing. Oof, man. I guess it's most likely from these headphones one way or another. Oof, this is tinnitus. Yeah, they say listen to relaxing music. Bro, I'm trying over here, man. You know? I'm gonna switch my ears, put in my other ear that's not ringing. Because, man. There we go. Bull for a long hold. Y'all buying and holding Rivian, or what do you gotta? What are you guys gonna do? It was very informative. Hey, look at this beautiful face, man. My ears are ringing from just how devastatingly handsome I must be. You know what I mean? Anyways, let me know if you can hear the music. You should be able to. Oof. Yeah, bro's dumping down. Bro's huge drop. Bro saw fiscal year 22 revenue of 700 to 715 million versus 717 million expected. So right around on par with expectations, a little bit lower for BROS, a little bit lower, but on the lower end of normal. Oh no, they are a little bit lower. So they were about 2 million lower. About 2 million lower. They projected 717s. They showed 700 to 715, so lower than expected. Adjusted EBITDA of 90 million. They said about Rivian says about 5,000 vehicles produced since the start of production as of May 9th. I thought they only produced 2,500. Oh, well, I guess this was the second quarter. So Rivian did have this to say. They said about 5,000 vehicles produced since the start of production as of May 9th, 2022. I think it'll drop to about 19. Hey, what's up, SPAC? I'm holding Rivian. 72% of the chat are currently Rivian bears. Hey, let me know, guys. Y'all Rivian bull or bears, let me know. Y'all hit the like button as well. Stop being greedy over here. You know, mosey your mouse on over to that like button and do it now. You know you want to. It feels good. It's calling your name right now. Hit that like button. Crazy market, only Rivian goes up. And Rivian is up, again, just to clarify this, Rivian is up after bad numbers. I guess they reaffirmed guidance was the only optimistic thing about their earnings report, I guess. But I guess that's a plausible reaction if the guidance is good. People are not betting on what the stock is doing right now. They're betting on what the stock will potentially do in the future and buying now. And so thus we have the upward movement, even though we have bad, not bad, but just worse than expected first quarter EPS. It wasn't incredibly lower, but it wasn't a small margin either. And so yeah, Rivian put in fiscal year 22 guidance for adjusted EBITDA loss of 4.75 billion, production of about 25,000 units, and they reaffirmed that first quarter EPS of $1.70 loss per share, missed the $1.44 loss per share by about 23 cents. Adjusted EBITDA loss of 1.14 billion, which was about 3 times what it was year over year. And Rivian is up from the time they announced their earnings. So that's today's market. But hey, let me know if you're bullish or bearish. Oof, dude, my ears are ringing, man. I had water today. I guess not. Maybe I'm dehydrated. Can dehydration cause ears ringing? Oof. If Rivian gets destroyed by Amazon, we'll drop at least 10%. Yeah, man. I don't know, bro. I really don't know. All right, guys. So it's possible. BYND. Yeah, Beyond Meat, man. Okay, here's the thing. I've watched Beyond Meat over the last 3-4 years of stock trading. I've watched it. Like, I've seen Beyond Meat. I've seen what it does. I've seen how it is. I've watched it move. And I've seen it kind of grow as a company. You know, Mitch and I, with Benzinga, covered this a long time ago. We were talking about Beyond Meat when Beyond Meat was roaring up to like $300+ or whatever it was. I can't remember exactly what it was, but we covered it a lot. We covered it a lot. And right now, Beyond Meat has just lost some market space, bro. Beyond Meat has just lost some market share. You know, if we look at Beyond Meat right now, what is that? Yeah, it's at $20 a share now. I mean, Beyond Meat has basically lost everything as a public company. They got absolutely destroyed. Maybe it wasn't 300. Maybe I'm thinking of Tilray. Okay, they were at 250 at one point in time. But yeah, Beyond Meat is just over with. You know, they just don't, you know, people don't need them anymore. There's so many other options, and it just the fad of produced meat like that, of growing your own meat like they're doing, just kind of fell off. People weren't as interested in it, and it was probably too expensive, and it was also probably hard for them to make it efficient, if that makes sense, right? And so yeah, tough. Save money though. Rivian needs to tank. Got to keep it fair. Everything else tanked. Yeah, but Rivian is a medium cap company that doesn't revolve around the market as much. You know, it's just Rivian has about 20 billion market cap. So, or wait, is this Disney? No, Rivian has 20 billion market cap. So yeah, Rivian is a medium cap company. That doesn't trend exactly with the market. It never has. You know, it doesn't trend exactly with the market. It depends on how large their cap is. But Rivian is a medium cap company. It trends slightly with the market, but we'll see what happens. The float of Rivian is about 900 million. So it's not a small cap. It's not a huge billion cap, but it's not small either. So who knows? Let me know if you're bull or bear on Rivian. BYND tanked. Bros tanked. Mostly everything tanked from this earnings report. You know, not much did well. Rivian bouncing right around $21, right around the VWAP. And the Disney earnings call has started. I mean, we can stream it until 5 p.m. when the Rivian earnings call starts. Let me know what you guys want. Yeah, we're streaming the conference. Typing. It's going to be at 5 p.m. This is when the earnings call is. I believe it's at 5 p.m. Let me make sure. Yeah, it's at 5 p.m. So it's in 25, 30 minutes. Stream the Disney call? I can. Y'all want the Disney call? Let me know. Hey, good luck, Unique. I can stream the Disney call for now, but I think most people want to. This is mostly a Rivian stream. So we can do either one. It didn't matter too much. Not a bad day, though. I mean, this is my P&L today. Like I said, we made over $100 barely. We got up to 119 cents. And so green is good. We'll take the green day. Second green day in a row in this bearish red market, but hey, we'll take it. All right, Rivian up to 22s here. Up to 22s. Yeah, we're waiting online for the earnings call. It's supposed to start in about 25 minutes. I swear, you're always green when everybody else is red, bro. That's just how I do, man. Listen, I can't help it, bro. I bleed excellence, bro. You know what I mean? Bro, Tom Brady would get beat. You know? We match Tom against me in trading, bro. Tom would go down, dude. You know? Tom can't inflate footballs over here, bro. He can't inflate trades like he inflates footballs, okay? Or deflates. Tom can't deflate trades like he deflates footballs. I'll deflate Tom like he deflated those footballs. All right. Is that enough? Did I say it enough? I think I did. All right. Tom Brady deflated footballs, okay? Who is buy stock on a Rivian? Rivian call in 25 minutes. Yeah, it's in 25. Listen, man, I'm not hating on Rivian, Mario, and I haven't been. You know? Here's the thing, right? Disney just popped. It must be something going on with their earnings call right now. They must have debuted something. Who knows? So, Tom Brady, bro, I think Fox is overpaying. Tom Brady's good and all, but I don't think paying him, that much is necessary. I don't think paying Tom like $15-20 million a year just to be their announcer is going to be worth it for them. I think that's expensive. You know what I mean? I think Tom Brady's great and people want to see him play football, and I think they care about what he has to say regarding the game, but I don't think they care $20 million a year worth. I think they're overspending a little bit for Tom, but good for Tom, man. Let him make his money. He's the GOAT. I mean, he can do whatever he wants. He doesn't care what I think or what they don't care what I think as well. You know. Yeah, so we can listen to the Disney earnings call while we wait. I guess we'll do that. Listen to him once already.
Recognition of Disney Plus's unique ability to attract viewers
Can y'all hear
from
this?
a range of demographic groups. We are selectively enhancing Disney Plus with general entertainment titles designed to drive signups among specific audiences and deepen engagement amongst those cohorts.
Can y'all hear this?
A benefit of our incredible creative
Hey, I
engine
appreciate
and decades of general entertainment excellence is that we can reach these demographics not only through the creation of original titles, but also by shifting resources from across our content ecosystem, especially as consumer behavior continues to evolve. Our strategy is not just to fill our distribution pipelines, but to be thoughtful with each asset to best position it amongst our various distribution options. For instance, Dancing with the Stars is a beloved show that has entertained viewers for more than 30 seasons on ABC and is a wonderful example of content that brings the whole family together. We recently announced Disney Plus will be the series' new home starting this fall. Beyond targeting specific demos, we are equally enthusiastic about our growth potential in international markets. We currently have over 500 local original titles in various stages of development and production. 180 of those titles are slated to premiere this fiscal year, increasing to over 300 international originals per year in steady state. We believe these premium local originals, along with branded content with broad international appeal, will attract new subscribers and drive engagement. One example in production is Nautilus from our EMEA team. Based on 20,000 Leagues Under the Sea, Nautilus is the origin story of the iconic submarine from the perspective of its mysterious commander, Captain Nemo. This is just one example of how our global network of creative hubs can develop and produce original content with worldwide appeal. And by the end of Q3, we plan to roll out Disney Plus to 53 new markets across Europe, Africa, and West Asia, starting with South Africa next week. Before leaving Disney Plus, I want to mention our recently announced plans to introduce an ad-supported subscription offering in the U.S. by the end of the calendar year and internationally in 2023. Expanding Disney Plus access through multiple price points is a win for consumers and advertisers. Of course, all of our success is rooted in great content. Our general entertainment team continued its string of phenomenal series with Hulu's Pam and Tommy and The Dropout. And while not in the quarter, we could not be happier with the performance of the Kardashians. More great general entertainment content is ahead, like the second season of Only Murders in the Building on Hulu and the record-breaking 19th season of ABC's Grey's Anatomy. This quarter, our studios earned 6 Academy Awards, including Best Animated Feature for Walt Disney Animation Studios, Encanto, and Best Documentary Feature for Onyx Collective and Searchlight Pictures, Summer of Soul. Pixar Animation Studios Turning Red premiered on March 11th on Disney Plus and became the fastest title to reach 200 million hours viewed on the platform. The Disney Plus original series, Star Wars, The Book of Boba Fett, drew positive reaction from audiences, and Marvel's Moon Knight continued the studio's impressive track record. Looking ahead, our studios will continue to deliver high-quality content at scale, with an exciting array of series and films coming to all of our distribution channels. In fact, our slate for the remainder of this year is incredibly strong, with titles like Obi-Wan Kenobi, Miss Marvel, Lightyear, Thor: Love and Thunder, Black Panther: Wakanda Forever, and the long-anticipated Avatar: The Way of Water. Finally, I must mention the phenomenal success of Marvel's Doctor Strange in the Multiverse of Madness, which opened to roughly $450 million worldwide this past weekend. Domestically, it was the second highest opening of the pandemic era and the 11th highest opening of all time. Our strategy of distribution flexibility has worked well for us, and these fantastic results are another sign of our ability to succeed no matter the platform. That success extends to sports. ESPN viewership was notably strong for the quarter across both live events and studio programming, with ratings up double digits, and we remain encouraged by how fans are engaging with sports content coming out of the pandemic. Opening weekend of the NBA playoffs was the most viewed in the past decade, and the ratings have been fantastic, with over 4.3 million average viewers through 20 games on ABC and ESPN. Our groundbreaking NHL deal is unique in its exposure across ESPN, ESPN+, ABC, and Hulu, culminating with the Stanley Cup playoffs, which began on May 2nd. In fact, the combination of the NHL and NBA playoffs going on simultaneously kicks off an exciting stretch of championship programming that also includes Wimbledon, the NCAA Women's and Men's College World Series, UFC, boxing, and more. Coming off the success of Monday Night Football with Peyton and Eli, we recently debuted our new season-long MLB alternative broadcast, K-Rodcast, with Michael Kay and Alex Rodriguez, and we began the inaugural season of PGA Tour Live on ESPN+, featuring over 4,000 hours of live golf coverage from 35 tournaments. Before I hand it over, Christine, I want to say a few words about our unique synergy machine, or franchise flywheel, if you prefer.
Ribby and ripping at $22
What sets
a
Disney
share.
apart is our ability to reach people with our uniquely engaging
Disney
content
dipping.
across an array of touch points to make our
It's always fluff.
portfolio of businesses and brands a bigger part of their lives. This enables us to not only create new franchises like Encanto, but to also build on
Disney
existing
tanking.
IP across our lines of business.
Just dropped about
One example
$2
of this
plus
is
per
our
share.
Toy Story franchise,
Ribby
which
and
was
ripping up.
created almost 3 decades ago with the release of the first film in 1995, and which is now brought to life across distribution platforms, geographies, businesses, and time. At our
Toy Story's
parks,
the
we
GOAT.
built a portfolio of 4 immersive Toy Story lands with more than 20 attractions and live character interactions available around the world,
Disney
as well
dropping.
as 2 themed hotels. The franchise is the cornerstone of Disney Plus, with all 4 feature-length films, as well as the original short series Forky Asks a Question, exclusively available on the service. And nearly 30 years after the film debuted,
Rivian
Toy
over
Story
22s.
is still a key consumer products franchise, generating over $1 billion in annual retail sales. And in just a few weeks, Pixar's Lightyear will tell the origin story of everyone's favorite Space Ranger when it hits theaters on June 17th. Of course, Toy Story is just one of our many franchises, but it illustrates our unparalleled ability to bring stories to life in more ways for more people in more places. In fact, our franchise library and capabilities will continue to set us apart even further as we bring our IP to life through next-generation storytelling that is more integrated and connected across consumer touchpoints. As we look to our second century, that's our mission, to transform entertainment by combining extraordinary storytelling
Rivian
with innovative technology
22.3s.
to create an even larger, more connected, and magical Disney universe for families and fans around the world. With that, I'll hand it over to Christine.
Thanks, Bob. And good
All right, guys.
afternoon,
Man, you know what
everyone.
Disney needs to do with
Excluding
ESPN? They need to
certain
eliminate
items,
the blackout
diluted
restrictions
earnings
for
per
Major
share
League
for the
Baseball.
fiscal second
Worst
quarter
part of
were
baseball.
$1.08, an increase of 29 cents versus the prior year quarter. We continue to be pleased with our financial results,
They're all
with
fluff,
total
guys.
segment operating income increasing by 50% versus the prior year quarter and by over 80% year to date. Our Parks, Experiences, and Products segment continued to show strong signs of growth and recovery as operating income increased by nearly
They weren't bad.
$2.2 billion year over year to approximately $1.8 billion. Growth was primarily driven by our domestic parks, which
Rivian
were
at
open
$22
for the
a share.
entire quarter. In the prior year, Walt Disney World was open, but Disneyland was closed for the entire quarter. We continue to be pleased with the overall demand and attendance trends at our domestic parks. In fact, there were
Rivian
many
dunked
days in the quarter
under
where we
22s.
saw demand exceed 2019 levels. However, we are continuing to control attendance through our reservation system with an eye on delivering a quality guest experience. As Bob mentioned earlier, per capita guest spending at our domestic parks increased by over 40% versus Q2 of fiscal 2019 and by 20% versus Q2 of fiscal 2021, with increases across the board on admissions, food and beverage, and merchandise. Looking ahead to the third quarter, our forward-looking demand pipeline at both Walt Disney World and Disneyland remains robust.
The Impossible
And while
Burgers weren't
attendance
bad.
from
I had some
international
Impossible tacos
visitation
and they were
is
good.
still in the early days of recovery, we are beginning to see some improvements. We are also thrilled that as of the end of March, all of our domestic resorts are now open, a major milestone as we continue to move through the impacts of the pandemic. At our international parks, operating results improved versus the prior year due to growth at Disneyland Paris, which was open in Q2 and closed during the prior year quarter.
13 minutes, guys.
This was partially offset by lower results at Hong Kong Disneyland and Shanghai Disney,
Yeah, Disney
both
makes
of
about
which were
20 million a
impacted
day from
by
their parks.
COVID-related closures in the quarter. Consumer products operating income increased in the quarter, reflecting higher sales of merchandise based on several of our iconic franchises, including Mickey and Minnie, Spider-Man, Star Wars, and Disney Princess.
Yeah, the tacos were good.
Moving on to the
Xavier.
Media and Entertainment
were good, bro.
Distribution segment, second quarter operating income decreased by approximately $900 million versus the prior year, as revenue growth of about $1.2 billion, primarily driven by direct-to-consumer, was more than offset by higher expenses, including programming and production expenses at linear networks and direct-to-consumer, which came roughly in line with the guidance we gave last quarter. At our linear networks business, operating income in the quarter was $2.8 billion, or roughly flat versus the prior year, as modest growth at our domestic channels was offset by a decline at our international channels. Domestically, higher operating income at broadcasting was partially offset by lower results at cable. Broadcasting results benefited year over year from affiliate revenue growth, in addition to higher advertising revenue due to the timing of the Academy Awards,
Yeah,
which
Rivian is
aired
out
in
already, Plan B.
Q2 this year versus Q3
Rivian numbers are right here, I'll
last
show
year.
them.
These impacts were partially offset by higher programming and production costs, also driven by the timing of the Academy Awards. At Cable, lower operating income versus the prior year was primarily due to an increase in programming and production costs. The largest component of the increased costs was driven by 4 additional NFL games versus the prior year, consisting of 3 regular season games as well as the return of the Pro Bowl. These impacts were partially offset by growth in cable advertising and affiliate revenue. Advertising revenue at ESPN increased by over 30% in the quarter, and third quarter to date domestic cash advertising sales at ESPN are currently pacing up significantly, benefiting from a return to a pre-COVID NBA schedule that is driving increased viewership and pricing. Total domestic affiliate revenue increased by 5% in the quarter. This was primarily driven by 7 points of growth from higher rates, partially offset by a 3-point decline due to
Rivian
a
dropping
decrease
Disney
in
back over.
subscribers. Operating income at our international channels decreased versus the prior year, driven by lower affiliate revenue and an increase in programming and production costs, partially offset by advertising revenue growth. At direct-to-consumer, operating losses widened to almost $900 million due to higher losses at Disney Plus and ESPN Plus and lower operating income at Hulu. The higher losses at our DTC services were largely driven by higher programming and production expenses, in line with what we noted in our
Look at
guidance
Disney
last
drop.
quarter.
See, it's been doing this whole time.
At
Look at
Disney
these big
Plus,
drops.
programming and
Strange.
production costs grew, along with marketing and technology costs to support our growth around the world, partially offset by higher subscription revenue. We ended
Strange.
the quarter with nearly 138 million global paid Disney Plus subscribers, reflecting close to 8 million net additions from Q1.
Disney back over previous
A
close
little
up
over
to
half of
108s.
those net adds were from Disney Plus Hotstar, which benefited from the start of the new IPL season towards the end of the second quarter. Internationally, excluding Disney Plus Hotstar, we added over 2 million paid subscribers versus the first quarter, with Latin America being the strongest contributor, driven by growth of the Combo Plus offering. Domestically, net adds of approximately 1.5 million reflect, in part, the success of tentpole content releases, including Turning Red and Moon Knight, as well as the strength of our bundled and multi-product offerings. ESPN Plus ended Q2 with 22.3 million paid subscribers, a net increase of about 1 million versus Q1. Operating results decreased compared to the prior year due to higher sports programming costs and lower pay-per-view income, partially offset by subscription revenue growth. And at Hulu, which ended the second quarter with 45.6 million paid subscribers, higher subscription and advertising revenues versus the prior year were more than offset by higher programming and production, marketing, and technology costs.
Spy Green and
Moving on to
post-market,
content sales, licensing, and other. Results decreased
which
by
is honestly
approximately
surprising.
$300 million versus the prior year, driven by lower TV and SVOD results, which we discussed in our guidance last quarter, in addition to a decrease in home entertainment results. As a reminder, these impacts are deliberately aligned with our strategic decision to utilize our content on our own direct-to-consumer services. Before I touch on a few things that we'd like you to keep in mind for the back half of the fiscal year, I'll quickly note 2 other relevant items for the second quarter. We recognized a revenue reversal of $1 billion
7
related
minutes
to the early
until the
termination
Disney
of
earnings
content
call, or
licensing
until the
agreements with a customer
7
in
minutes
order
until
to
the
make
earnings
that
call.
content available on our own direct-to-consumer services. Because substantially all of the consideration we received was recognized as revenue at the time that content was originally made available in previous years, we've recorded amounts to terminate the agreements, net of remaining amounts of deferred revenue, as a revenue reversal. Finally, a note on the impact of some tax-related items on our Q2 EPS.
All right, guys, so the
Our
Rivian earnings
diluted
call starts at
earnings per
5
share,
p.m., so 7
excluding
minutes.
certain items of $1.08, includes an adverse impact of approximately 11 cents due to the impact of higher effective tax
Bitcoin
rates
just
on
broke under
foreign
29K.
earnings, including the impact of a recent change in U.S. tax regulations. It's worth mentioning that while our annual effective tax rate has generally been correlated with the U.S. statutory rate, there are many complex puts and takes in any given period, which can lead to these variances quarter to quarter. And we currently expect the full year tax rate could remain somewhat elevated above the U.S. statutory rate.
Bitcoin just dropped under
Now,
29K.
as it relates to the third quarter and the second half of fiscal 2022. At DPEP, closures at our Asia theme parks could adversely impact operating income in the third quarter by up to approximately $350 million versus the prior year. As a reminder, Hong Kong Disneyland was closed for the first 3 weeks of the quarter. Shanghai Disney has been closed quarter to date, and we do not yet have visibility to a reopening date. As we continue to strategically prioritize
6 minutes,
leveraging
guys,
our
6 minutes.
content for our own services, we expect content sales, licensing, and other operating results to decrease in the third quarter by approximately $150 to $200 million versus the prior year. The expected decrease is primarily driven by declines in content licensing, along with a continued decline in home entertainment results. Direct-to-consumer programming and production costs in Q3 are expected to increase by more than $900 million year over year, reflecting higher original content expense at Disney Plus and Hulu, increased sports rights costs, and higher programming fees at Hulu Live. At Disney Plus, while we still expect higher net adds in the second half of the year versus the first half, it's worth mentioning that we did have a stronger than expected first half of the year. Additionally, note that some of the Eastern European markets we're launching in towards the end of Q3, including Poland, are in regions being impacted by geopolitical factors. As it relates to content spend, we previously stated that we expect fiscal year 2022 cash content spend to total as much as $33 billion. We've adjusted that amount to as much as $32 billion to reflect a slightly slower cadence of spending than anticipated during the first half of the year. Note that we are still expecting a strong content slate in the back half of the year, and as Bob mentioned, we are confident in our long-term subscriber guidance of 230 to 260 million Disney Plus subs by fiscal 2024. We also still expect that Disney Plus will achieve profitability in fiscal 2024. And with that, I'll turn it back to Alexia, and we would be happy to take your
Bitcoin down
questions.
to almost under 28K, guys. 3 minutes
Thank
until
you,
the
Christine.
Rivian earnings call. 3
We're
minutes.
happy to be back here in person for this call, but to make it easier, I will help direct the questions.
Wow.
We ask that you please limit yourselves to one question in order to help us get to as many analysts as possible today.
Bitcoin crashing
And with that,
28.3
operator,
thousand.
ready for the first question.
Thank you. Your first question is from
All right, guys,
Brett
I'm going to go ahead and
Feldman with
close this
Goldman
down in
Sachs. Please
anticipation
go
of the
ahead.
Rivian earnings call.
Yes.
So I'm going to go ahead and close this down in anticipation of the Rivian earnings call. Still waiting for the Rivian earnings call now. But yeah, Bitcoin just broke under 30K, hit 29, under 20, under 29 now at 28.165 thousand. So Bitcoin is actually crashing down as we speak. Kind of a brutal time here. Brutal time for cryptocurrencies. Now you got to remember Bitcoin's ultimate move up to where it was beforehand. Bitcoin went up to 20K, dropped down to 3K, and then went up to almost 70K. And so I don't know if I'm scared by the drop yet, but we'll see what happens. I was never a huge Bitcoin holder. I believe in other cryptos a little bit more than Bitcoin. I think Bitcoin is the base, but I think Ethereum is far more useful as a cryptocurrency than Bitcoin is, just because Ethereum is kind of like, it has more utility than Bitcoin is. But regardless, Bitcoin crashing is rough. It's down to 28.3 thousand. I just think there's going to be a lot of volatility on the upside now. I don't think this is going to continue, and I think it mostly has to do with the broader market just getting pummeled. There's a lot of bearish action both in stocks and crypto right now, and it's just brutal as a whole. All right, guys, we got 2 minutes, guys. 2 minutes until the Rivian earnings call starts. Let me know what you guys think as we wait for this. You look worried. I'm not. I don't really hold a lot of Bitcoin, Joe. So it's like it's not really affecting me that much. Like I can watch this drop and just be like, wow. It's more so just kind of deer in headlights. Like, wow, man, Bitcoin just broke under 30K. It's weird because you've been considering it as this 40,000 and 50,000 and $60,000 token, and now it's under 20. It's under 30,000. I mean, the real question is, are you buying the dip, or are you just scared of the entire crypto market now? And I guess either one of them is okay. It's just interesting. Yeah, Ethereum down to 2K, Yeah, if it goes to 4K, I'm definitely buying it up. I think over time, Bitcoin will be fine, but these fluctuations happen roughly once every 4 years. And so it's just part of the normal how they move, man. Bitcoin was never the most stable thing in the world. It was always very volatile. And so, we'll see what happens. All right, guys, we got less than a minute. We got the Rivian earnings call. We're waiting for the hold screen or the hold music to end. I got some tacos here. If you're in Texas, I got some Big Oats tacos. We're about to go eat those. Yeah, we're going to be listening to this earnings call live. We got over 200 people here. Listen, guys, if you haven't already, if you want to see an inside look at one of the reasons the Bitcoin market is down, we posted a video on an inside look at the Luna Terra UST crash and why it happened. We posted a full almost 20-minute video detailing exactly what happened with the Luna crash. And if you guys want to check that out, I certainly appreciate it. Hit the subscribe button, hit the notification bell. I think the bigger risk for this crypto market is if Coinbase goes bankrupt, that will drastically impact freaking everything. And it already has. I mean, Coinbase hasn't gone bankrupt, but it already has influenced everything. But if Coinbase goes bankrupt, that will severely impact everything. All right, we're still waiting on hold for the Rivian earnings call to start. We got it up just like the Disney call. The Rivian earnings call should start pretty soon. Nothing yet, so we're just kind of waiting here. But yeah, no, I never thought it was going to hit 100K by 21. I thought that it's going to take some time, 2030, or so, and it's going to go up and down, up and down. But I've never been, like I said, I've never been a heavy Bitcoin holder. Like I've never held that much, even Ethereum. Like I hold a little bit, but it's not like I'm more interested in the up and coming ones. I think those have the biggest reward and the smallest risk if you trade them correctly. And so,
any further assistance, please press *0.
All right, guys, sound good?
As a reminder, this conference call is being recorded. I'd now like to turn the call over to Mr. Tim Bay, Vice President of Investor Relations. Please go ahead, sir.
Good afternoon, and thank you for joining us for Rivian's
Can you hear the
first
call?
quarter
Let me know.
2022 earnings call. Joining us on today's call, we have RJ Scaringe, our founder, chairman, and chief executive officer, and Claire McDonough, our chief financial officer. A copy of today's shareholder letter is available on our investor relations website. Before we begin, I would like to remind you that during the course of this conference call, our comments and responses to your questions reflect management's views as of today and will include statements related to our business that are forward-looking statements under federal securities laws, including, without limitation, statements regarding our market opportunity, industry trends, business operations, strategy and goals, our second domestic manufacturing facility, our future products, including R2, and our expectations regarding vehicle delivery. Due to risks and uncertainties associated with our business. Except as may be required by law, Rivian does not have any obligation to update or revise such statements if circumstances change. For a discussion of the material risks and other important factors that could impact actual results, please refer to the cautionary statements and risk factors contained in our SEC filings and today's shareholder letter, which can be found on our website at rivian.com/investors.
All right, so I had to adjust the audio. Let me make sure you can hear. Give me a green light. Y'all can hear this?
A reconciliation of GAAP to non-GAAP financial measures is provided in today's shareholder letter. With that, I'll turn the call over to RJ, who will begin with a few opening remarks.
We're happy to be here with everyone today and look forward to discussing the progress we've been making. Just before the call, we published our shareholder letter, which includes an overview of our progress over the recent months. I encourage you to read it for additional details around some of the items we'll cover on today's call. As of May 9th, we've produced approximately 5,000 vehicles since the start of production. We are now producing and delivering the R1T, R1S, and EDV 700, with the slightly narrower and shorter EDV 500 going through final production trials now. And we've done all this in one of the most challenging operating environments in decades. We have $17 billion of cash and believe we have a clear path to launch R2 in Georgia in 2025 with our current cash on hand. Our goal is to build and scale a large business that addresses both the consumer and commercial markets. Our launch of the R1 and EDV products positions us to grow rapidly as we fully ramp the 150,000 units of installed capacity in our Normal, Illinois manufacturing facility. We have a lot of work ahead, but the passion and endorsement we have seen from customers and third parties, such as being named Motor Trend's 2022 Truck of the Year, demonstrates the impact our team can drive as we remain laser focused on ramping production and getting more vehicles on the road. With regard to our production, we are encouraged by the acceleration of our demonstrated production rate. Our plant is now achieving cycle times 3 times higher than the start of the year. These demonstrated production rates, which we expect to continue to increase, coupled with our current supply chain outlook, give us confidence in our ability to hit our targets for 2022. Equally important, demand continues to accelerate, and as of May 9th, we had over 90,000 pre-orders for our R1 products in the US and Canada. All of our orders have been attracted by organic growth and brand awareness, and without any paid marketing or media. It is worth noting that since our March 1 price increase, we've received over 10,000 R1 pre-orders for the US and Canadian market, with an average price of over $93,000. These orders are in addition to the 100,000 commercial van order from Amazon. As we ramp production and deliveries of EDVs, we are excited about the impact that our close partnership with Amazon will have in the commercial vehicle space. As we've begun ramping deliveries, the feedback has been tremendous. One of my favorite parts of the week is when I sync with our customer engagement team and hear the feedback they are receiving around the vehicle, process, and the interactions with our team. We love seeing photos of our vehicles in the wild, enabling customers' adventures. Our core focus as an organization for 2022 is to get more R1s and EDVs on the road. The majority of our time is focused on ensuring our teams are driving towards ramping production and deliveries to customers. Core to this is addressing the supply constraints that we have dealt with thus far, and I'm very confident today in the relationships and associated commitment we have built with our suppliers. As we demonstrate our production ramp, our suppliers are leaning in to help ensure we can achieve our targets. Before handing off to Claire, I want to comment on our R2 program, which is being developed and planned for our Georgia facility. We are leveraging the many learnings from our R1 and RCV platforms, and we are working to ensure the R2 sets a high bar in terms of affordability, unit economics, performance, and efficiency. This global platform is critical for our long-term growth, with a lower price point to further expand our addressable market. R2 will also leverage many of the cross-platform technologies that will be incorporated into R1 and RCV platforms, including our single motor drive unit, which we call Enduro, and our next generation network architecture and associated family of ECUs. I couldn't be more excited about the ramp of the R1 and EDV vehicles, as well as the products, services, and technologies we have in the pipeline. With that, I'll hand it over to Claire.
Thanks, RJ. I'll start with a review of our first quarter 2022 results. In Q1, we produced 2,553 vehicles and delivered 1,227 vehicles, which was the primary driver of the $95 million of revenue generated in the quarter. As we've discussed in the past, the volumes being produced on our manufacturing lines are a small fraction of our current 150,000 units of annual capacity. We generated negative gross profit of $502 million in the quarter. As we ramp production, we expect high fixed costs associated with running our large-scale, highly vertically integrated facility will continue to impact our total gross profit. Our negative gross margin was impacted by inflation and the production of low quantities of vehicles on large-scale production lines as we ramp. This includes the costs associated with expedited shipping expense, labor and depreciation, as well as some accounting adjustments such as lower of cost or net realizable value, LCNRV. As discussed on prior calls, the LCNRV adjustment writes down the value of certain inventory to the amount we anticipate receiving upon vehicle sale after considering future costs necessary to ready the inventory for sale. As we ramp production, we expect to leverage our labor and other fixed costs to drive improved gross margin per vehicle. While our operations teams work diligently to ramp production of the R1T, R1S, and EDV 700, our customer engagement, service, and delivery teams are also accelerating efforts to enhance customer experience across the country. Additionally, our engineering and design teams continue to progress on our next generation in-vehicle technologies. Our vertically integrated approach is designed to drive long-term structural cost advantages as we expand our production and product roadmap. Our adjusted EBITDA for the first quarter was negative $1.1 billion. We continue to strategically invest in our plant in Normal, Illinois, lab facilities, and service operations. We also expect to begin investing additional capital into our Georgia facility later this year. Our capital expenditures for the first quarter were $418 million. We ended the quarter with $17 billion of cash. While we operate a capital-intensive business, we have a high level of flexibility regarding the cadence of our growth investments. As RJ mentioned, our current priority is ramping the 150,000 units of R1 and EDV capacity to meet the tremendous demand we have for these products. We have optimized our product roadmap and associated operating expenses and believe we have a clear path to launch R2 in Georgia in 2025 with our current cash on hand. We are also reaffirming our 2022 full year guidance of 25,000 total vehicles produced. We anticipate a significant acceleration of production throughout the second half of the year as our demonstrated capacity improves and we accelerate the ramp up of key shops. In addition, we're reaffirming our 2022 adjusted EBITDA guidance of negative $4.75 billion and capital expenditure guidance of $2.6 billion. Our outlook does not assume a material change in the overall operating environment. Going forward, we plan to provide production and delivery results shortly after the quarter end. We will no longer be providing intra-quarter production and pre-order figures. In closing, I want to thank our team, community, customers, and suppliers for another successful quarter. Thanks to our truly differentiated vehicle and technology platform, we're seeing such tremendous feedback and enthusiasm. We have a steep climb ahead of us, but I couldn't be more confident with the plan that we have and the path that we're on. With that, let me turn the call back to the operator to open the line for Q&A.
Sure, ma'am. As a reminder, if you have a question at this time, please press star one on your telephone keypad. If your question has been answered or you wish to remove yourself from the queue, press the pound key. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of John Murphy with Bank of America. Your line's now open.
Good evening, everybody. Just a first question around production versus deliveries in the quarter. Production is essentially almost 2x the deliveries. I'm just curious, why there was such a gap between the two this quarter. If it's just a question of timing of vehicles in transit or what's going on there. Because traditionally, because of the lack of the dealer network, we kind of assume they're going to be a lot closer.
Thanks, John. Yeah, as you said in the question, there is a gap between production and deliveries, and it was just that the timing effect of vehicles being built and being in transit and essentially prepped for delivery. As you said, given that we have a direct model where we sell vehicles directly to consumers, lining up those customers, ensuring the delivery, creating a great customer experience. There's always going to be some separation between the total production number and the number of deliveries.
Okay, but it was nothing other than simply just processing, RJ. There's not like there's vehicles being held for any kind of quality or post-production inspection or anything like that.
No, in fact, when we talk about production numbers, we're referring to as vehicles that are factory gated. So these have gone through the full quality inspection process. Production numbers do not include any partially complete vehicles. These are fully ready to deliver to customer vehicles.
Super helpful.
One point that I would just add on to that question is that because of the rate at which we're ramping production, because we're continuously scaling week over week over week, there always will be that lag effect in regard to the vehicles that are ultimately in transit. So it's something that will continue, but won't likely to be the same sort of percentage of ratio of produced vehicles relative to delivery.
Got it. And then just a second question on the run rate of production. I mean, it seems like there's about 1,800 units that were produced from April 1st to May 9th, roughly. And I have to do some dumb guy's math and just double it. That gets you to 3,600, but that doesn't even give you the benefit for the full quarter and the acceleration. So it seems like you are on pace to hit at least in our model, 4,000 units plus in the second quarter. Is that kind of reasoning about correct? And I mean, just given that you're getting a good acceleration in production here, it seems like you might be even ahead of that. Should we think about it that way? And is there any tempering of parts specifically that might gate your ability to get there?
Yeah, that's about the right way to look at it. I'd want to point out a couple of things. We've seen the overall production rate continue to increase. In fact, our cycle time has seen a 300% or 3x improvement since the start of the year through the course of Q1, and we continue to see that production rate improvement as we go through quarter 2 here. So you alluded to it, but we are in midst of an S curve. So the end of the quarter will be producing at a faster rate than the start of the quarter. As we look at this quarter thus far, the plant's been able to outproduce our supply chain, and what gives us a lot of confidence as we look at the time ahead is the clear line of sight we have around the ramp up of our supply chain and the close relationships we have with those key suppliers.
Okay, and just the last question on pricing and the price increases. I mean, obviously they're a result of input cost increases, but is there margin that goes along with these price increases? More specifically, maybe are you raising your prices exactly to what your cost is, or is it above that? So there's actually some sort of parallel margin that's going along with it on a unit basis.
Right. So the way I would think about the margin opportunity that we have, and you'll really see this kick in from an inflection point as you think about the 2024 margin opportunity that we have, which brings together the combination of us really ramping and accelerating the production volumes within the plant, combined with the move from our sort of pre-March 1st pre-order cohort to our post-March 1st cohort. And embedded in that post-March 1st cohort, there is a true step change that you'll see in regard to the overall aggregate gross margins that you'll see within the business. And so the growth from a gross profit margin rate over time, it's not linear. It truly is a step change function as you think about us moving to this post-March 1st cohort. And as we talked about a bit in our shareholder letter as well, we're also now moving towards a reservation system versus the historical pre-order system that we've had, which allows us to have the customer configure their vehicle closer to the delivery date, which enables us to understand the dynamics within the inflationary market at that time, but also importantly ensure that customer has all of the core vehicle capabilities that we're introducing in that configuration as well. So we think that the combination of those two factors will really help us from an ongoing margin perspective and allow us to really be nimble and dynamic as we evaluate this inflationary backdrop.
That's very helpful. Thank you very much.
Thank you. Your next question comes from the line of Adam Jonas with Morgan Stanley. Your line is now open.
Hi, Claire. I just wanted to follow up. You mentioned, if I quote, you have a high level of flexibility in the cadence of your growth investments. So on the topic of cost control, your enterprise value is currently just above $0. And it's sending the message, the market's sending it the message that if you don't get your supply chain costs under control, that you might have to significantly dilute shareholders. That's what happens when you see a zero, zero enterprise value. Now, you reiterate the 25,000 unit delivery target and the $7 billion plus kind of cash burn, your EBITDA and CapEx. So my question is, if you had to control cash consumption of the business due to force majeure events outside of your control, and you alluded to flexibility and cadence, but could you elaborate what levers could you pull to slow the burn and give you more runway to execute and restore confidence in Rivian and the capital markets? Thanks.
Thanks for that question, Adam. As you mentioned, right, we're clearly in the driver's seat with $17 billion of cash on hand. And it's important to also note that we've made foundational investments that have allowed us to rapidly scale the business in both the consumer as well as the commercial market. We have 150,000 units of capacity for our R1 and RCV platforms. And as we talked about as well, demand remains incredibly strong with over 90,000 R1 pre-orders and an initial order of 100,000 units from Amazon. And as we just talked a little bit about with John's previous question, right, we do see significant path forward as we're ramping production and able to ultimately have that step change where we're now harvesting, right, the profitability of all of those foundational investments that we've made in the production capacity that's online and the launch vehicles that we've come to market with. And so this ultimately gives us that flexibility to decide, right, how we're deploying our capital on a go-forward basis. And as you mentioned, with regard to what those key levers are, we have the ability to live within our means as we think about the profitability that Normal itself can deliver for Rivian. That will allow us to really pace the ongoing growth of the business and ultimately allows us to have that flexibility on when and how we would raise additional capital on a go-forward basis. And as we talked a little bit about, we do believe we have the cash on hand to launch.
I understand, Claire. Let me just do one follow-up and I will shut up. For you and RJ, since your IPO, the world has changed dramatically. Investors just don't want to fund negative EBITDA growth, EBITDA companies in this environment, and the supply chain issues have gotten, to your point, significantly worse in both quantity and input cost. So has anything changed in your team's strategy to adapt to the changes in the environment since the IPO?
Yeah, Adam, this has been something we as a leadership team have spent a tremendous amount of time on, of course, from a scenario planning point of view, but also just looking at the product roadmap and how we plan to invest and deploy capital over the coming years. And as Claire said, one of the really important things for us to recognize here is we have $17 billion in cash. We have 150,000 units of capacity with CapEx that's installed. And it positions us well to now harvest and use that to leverage or create a significant amount of growth while we focus investment and focus our dollars on development and preparation for launch of R2. So what we've really done is, and what we've been working hard on is to channel and focus our capital on a really important program for us in terms of scaling, which is the R2 program. But of course, maintaining laser focus on ramping up the existing capacity that we have, such that we can fully, as Claire said, harvest the revenue associated with it.
Thanks, RJ.
Thank you. Your next question comes from the line of Joseph Spak with RBC Capital. Please go ahead.
Thanks. Good afternoon. RJ, you alluded to some better visibility with your suppliers. I was wondering if you could provide a little bit more color and detail on some of those conversations with those suppliers that you mentioned had some bottlenecks last quarter that gives you that level of confidence.
Sure. So we previously talked in our last call around some of the challenges we've had, inclusive of semiconductors as well as some other components. And where we stand today, a lot of those other challenges have been resolved. We've worked with those suppliers to ramp their production. We have clear line of sight to them being able to keep up with our continued ramp in our facility. As we noted in our opening statements, just the the importance of us shifting to or moving to a 2-shift operation mid this year. And of course, the suppliers need to be capable of supporting that. With that said, we also have very tight relationships with the semiconductor suppliers, and we've seen some. We believe we've seen really the worst of it, or sort of the valley, if you will, of these supply constraints. And the suppliers are leaned in. We have very high levels of visibility into what the allocations will be on a go-forward basis, and that gives us the confidence in what the ramp will look like as we look out through the remainder of this year.
Okay, and then just maybe to follow up on Adam's point about scenario planning and changing strategy. Your answer made it seem like you're being prudent about how you spend for next generation platforms. I guess what I'm wondering is, your plan involved doing a lot of things on your own or insourced and throughout really the entire value chain. Has this experience and the changing capital markets led you to reevaluate whether you might rely on other partners or any sort of about face in terms of what you want to do versus you might let others do for you as you go and sort of execute upon your longer term plan?
There's a few things to think about here, Joe. So first is our original plan had a number of additional variants, both of the R1 product as well as even propulsion platforms that were planned for the future pipeline. And what we've done is we've really looked at the incredible level of demand that we have for the R1 products as they are, and recognized that there's some big technology development efforts to further advance those products, but we've aligned those very nicely with the R2 program. So our what we call Enduro, this is the single motor drive unit that's used in the EDV platform, in a front drive application, and in the R1 platform in a dual motor or all-wheel drive application. Our next generation network architecture and associated family of ECUs, and of course our LFP battery pack, which is going to be launching in the EDV later this year. All those technologies, we're able to share those not only across the R1 and RSV platforms, but a number of them really line up nicely with the R2 program. And so what we've been focused on is simplifying the product plan and the product portfolio as much as possible, but we haven't in any way at all shifted our focus on the need to vertically integrate our software stack, vertically integrate around our electronics and ECU topology, and of course, vertically integrate around our propulsion stack. So we do believe those are really important from both a structural cost point of view, but also from a product attribute and feature point of view. But we have simplified the overall product set, and we've done that in a way that, as you've heard us talk about here, it puts us in the driver's seat, so to speak, in terms of controlling our need for additional capital and ensures that we're able to launch R2 with the capital that we have.
Thank you.
Thank you. Your next question comes from the line of Emmanuel Rosner with Deutsche Bank. Your line's now open.
Thank you very much. First, one super quick point of clarification. So you mentioned your reservation having received 10,000 reservations since the price changes, but then obviously the latest update at 90,000 is only up 7,000 or so versus the last update. So what are you exactly netting out of this? Is it the cancellation or the deliveries that you've already done?
So the net is both of those things. So when we report net pre-orders, every delivered vehicle that we have comes out of that base of pre-orders, and so it is the netting effect of the delivered vehicles that we've had throughout both last quarter as well as the quarter to date period, as well as any embedded churn within the pre-order base.
Okay, that's very helpful. Then your target to launch R2 in 2025 with current cash on hand is obviously very encouraging. How do you plan on accomplishing this? Are you modifying the CapEx trajectory? Have you identified areas where you'll need to spend less capital? Do you anticipate lower operational cash burn than previously anticipated? I guess how will you do that?
Sure. As we mentioned, one of the core catalysts that enabled this path forward to launch R2 in Georgia with our cash on hand is both the profitability that we're going to begin to deliver with the 150,000 units of installed capacity that we have in Normal. It's also important to note, as we think about Georgia, we're building Georgia in a modular fashion. So the first phase of Georgia will be an R2 line with 200,000 units, and that first 200,000 units will be what comes online in 2025. And so instead of building the full 400,000 units at once, that is certainly a embedded CapEx savings within the plan and forecast that we're thinking about. And additionally, as you heard from RJ, a number of the strategic decisions we've made to really focus and prioritize our product development roadmap also come with embedded CapEx savings, as well as we think about the CapEx forecast over the next handful of years.
Understood. Very finally, how's the ramp up of the Amazon van deliveries going? And out of the 25,000 target for the full year, how many of those would be on the commercial vehicle side?
Yeah, we're excited to be producing and delivering the EDVs. As I said earlier, we've launched the EDV 700 in terms of what's being delivered to Amazon, and so this is the roughly 700 cubic foot version of the van. We're in the production trial stage of the EDV 500, but with regards to the EDV 700, this involved, as we talked about in a previous call, a heavy amount of iteration and refinement with Amazon in terms of how it fits into their digital ecosystem, and getting a tremendous amount of driver feedback through a series of trials and a series of feedback loops with drivers. So we're excited to have been through that, have made a whole host of improvements over the course of really the last year, such that the deliveries that are now happening are going to start to ramp up, and you're going to start to see a lot more of them, hopefully coming into all of our neighborhoods delivering packages. But with that said, we haven't provided guidance on the exact split between the R1 and the EDV product line. But broadly speaking, we would look to say, well over a majority will be in the R1, with EDVs making up, on the order of a third of total production.
Great. Thank you so much.
Thank you. Your next question comes from the line of Alex Potter with Piper Sandler. Please go ahead.
Okay, great. I had a follow-up question on vertical integration and software. Your strategy, obviously, it's very clear. It's differentiated. I mean, you're trying to layer in your own in-house software on top of your own in-house electronics, including some of the sort of quote-unquote boring firmware, middleware, and other things that customers maybe never get a chance to see. And obviously, there's another school of thought that suggests that it's redundant for auto brands to go so deeply, into some of that behind-the-scenes software, and that everybody should standardize around kind of a base-level third-party system, and then only differentiate at the customer-facing end of the software stack. So I guess my question for you, first of all, I want to make sure I'm articulating all that correctly, but then secondly, why do you think your strategy is right and the other one's wrong?
Yeah, thanks, Alex. It's a great question. When you look at a product as complex as a vehicle, and in particular a vehicle that's connected with a host of sensors between cameras, radar, ultrasonics, with a whole bunch of actuators, so this is suspension, braking, motors. The traditional model is to buy, as you said, a number of compute platforms, ECUs, from different tier 1 suppliers, and to put all those different ECUs together. And then the OEM essentially does some part of, or at least prescribes how it should be done at the application layer. From our perspective, to create a really unique customer experience and to create an experience in which we can fully leverage all the sensors, all the hardware in the vehicle, and continually improve the vehicle over time, truly improve it, more than just putting a new color on the screen, but actually going deep into the performance of the vehicle, whether that's referring to self-driving, whether that's referring to performance attributes, or whether that's digital characteristics or digital capabilities of the vehicle. We feel really strongly that it's important to both develop and control the full stack. So that's designing and developing the compute platforms across the vehicle. So that's all the electronics. Of course, by doing that, being able to design a very efficient network architecture. And then, of course, within that, building all the layers of software from the low-level operating systems all the way up to the applications layer. And what's exciting to see is the beginnings of from a customer-facing point of view of why that matters. And so we've done a number of OTAs, over-the-air updates already with customers, and these are just an early sampling of what's to come. So adding features like a garage door opener to the vehicle, adding enhanced self-driving features, adding additional drive modes, adding additional diagnostics platforms. So there's a host of things we can go very deep into the vehicle and across platforms because all those platforms are controlled internally. And this is important not just on the consumer side. This is also, we feel, really important on the commercial side, where it really underpins a lot of the core capabilities we embed in our Fleet OS product, where we can predictively analyze the need for maintenance. We can predictively manage the health of the life cycle of a vehicle. So there's a number of characteristics that are useful as well on the commercial side.
Okay, great. Thanks very much. And then the second question, I guess, on Georgia in the R2, how close are you to finalizing, I guess, maybe the exact bill of materials for the R2, the exact design and the layout for Georgia? It sounds like you're working on a modular plan. I guess anything in that regard, it's especially related to things like single piece castings or any of the sort of new manufacturing techniques that we're hearing about. How close are you to finalizing all of that in Georgia? Thanks.
Well, Georgia's for us is a really interesting, exciting opportunity because it's going to leverage the learnings we have from going through ramping all of our production operations in Normal. And in Normal, you can really think of it as two plants housed in one site. So we have the R1 production line, and then that was sort of our Gen 1 line, if you will. And then we have our RCV platform, Rivian Commercial Van platform. And with that, separate body shop, separate general assembly. And so a number of learnings were already embedded into that second set of lines we built in Normal. And as we now look at Georgia, the opportunities to learn from a production line layout point of view, as well as the product itself, and pull all those together to create really a world-class product in terms of affordability, world-class product in terms of CapEx efficiency. That is the major focus from a development point of view for the product teams and for the plant design teams. And so what's also important to note is that product coming to market in 2025 will have the time to even further encapsulate more learnings as we continue to go through ramp, and as the vast majority of our organization continues to be focused on ramping up in our Normal facility between the R1T, the R1S, the EDV 700, and the EDV 500. But those learnings are certainly flowing into how we think about R2 and part simplification, part consolidation. Like you mentioned with usage of castings, we certainly used castings in the R1 and RCV programs, but the opportunity to consolidate even more parts is something we're excited about, and driving those manufacturing and cost efficiencies into that product is going to be critical.
Great. Thanks, guys.
Thank you. Your next question comes from the line of George Gianarikas with Baird. Please go ahead.
Hey, good afternoon, everyone. Thanks for taking my question. RJ, you recently rang the alarm bell in an interview around EV materials, and several of your competitors are signing direct deals with miners of lithium and other minerals. One of you can articulate your strategy and how deep the relationships go that you're developing in that field. Thanks.
Yeah, thanks, George. In a recent interview, I was discussing some of the longer-term strategic challenges we're going to face as an industry as we go from less than 10 million units being produced a year, electric vehicles being produced a year, to every vehicle being produced globally becoming electric. And as we think about that, we do believe there's going to be material constraints as we get to the sort of near the end of this decade. I want to be clear, though, that as we look out over the next 5 years, we do not see any battery cell supply constraints or material risks. And the way we've approached our battery cell strategy, as well as our far upstream raw material, precursor material strategy, is to make sure that we have a diversified approach. So what we've launched with between the R1 products and the RCD-based platform products has been a high nickel cell. It's a cylindrical form factor. But later this year, as I mentioned, we introduced an LFP chemistry, lithium iron phosphate chemistry, which of course is a hedge on nickel pricing, also just inherently a lower cost chemistry, and fits beautifully as a base model configuration, and certainly for a commercial vehicle fits really, really nicely. As we look at diversification, it's not just looking at high nickel or iron-based chemistries, but also making sure that we have the right selection of cell supplier partners. And we're very happy with the relationships that we have, and continue to grow those relationships. Now, to your question, though, to be very specific around raw material, and I think specifically here, lithium carbonate in the case of lithium iron phosphate battery cells, and lithium hydroxide in the case of high nickel cells. These are really key areas, I believe, for anyone serious about achieving significant scale, multi-million vehicle per year scale, to have secured supply chains around. And we're working very hard to build those relationships and put together the right types of deals to secure these really critical precursor materials. I think everybody on this line can appreciate the risks around the material cost. We've seen the price of lithium hydroxide go up quite considerably over the last several months, and that's affected everyone. So making sure that we have confidence of supply as we look out in the latter part of this decade, and where we see risk of scarcity for those key precursor materials. That's something we're very focused on, and at a future time we'll be able to make some announcements around that.
Thanks. And if I may take it to the complete other side of the spectrum and ask you about your autonomous offering, and any update there, any new learnings, and how that offering is driving future product decisions. Thanks.
Sure. So in our launch products, we have a feature we call Driver Plus, and sort of the core of that feature is a highway feature where essentially the vehicle is capable of driving itself. But today that's geofenced really to highways, and we've developed that platform in-house. And as we look out over time, that capability is going to continue to grow. So we'll do that with over-the-air updates, where for the existing vehicles that are already delivered to customers, as well as future vehicles, that feature will extend into more roads. And along with that development, which is software-based, we're also upgrading and improving the hardware set. So what we've talked about in terms of our next generation network architecture, this also includes with it additional compute, as well as updated cameras, as well as a few other sensors on the vehicle to support continued progress above and beyond the level 2 feature set that we have today. And Claire talked about this in the context of how we'll be taking orders and moving to a reservation-based process. One of the reasons for that is with our demand backlog being so large, the products we'll be building in 2 years will be different than the products we're building today. And when I say different, I should say these products will be improved. They'll have different hardware that's part of some of these improvements we're going to be making from a compute point of view, from a perception stack point of view, and of course, along with that, the improved network architecture that'll be going into these future state products.
Thanks, guys.
Thank you. Your next question comes from the line of Charles Caldicott with Redburn. Please go ahead.
Hi, guys. Thanks for taking my questions. Firstly, on production, the shareholder letter mentions that one reason why the weekly rate of production slowed to about 250 units, I believe, per week in the last 5 weeks, from 350 in March, or at the end of March, was that you lost 25% of your planned production due to additional stoppages. Can you just clarify, what was it that forced the longer periods of stoppage than you had anticipated in April? Is that now over? And is May's production rate now back to what it was in March, or even above that?
do want to clarify something here. So while the rate that you've calculated here indicates that there's been a slowdown in March, the actual production lines themselves, both in terms of their stability as well as their production rate, has continued to improve. The challenge is, as those lines have continued to improve, we've had supply constraints that haven't allowed us to actually fully utilize them. So as we said, of the single shift operation that we're on today, we lost a little more than 25% of the time. So the number of vehicles we produced to date this quarter is almost exactly equal to the number of semiconductors we have to support all the components that go in the vehicle. So what's encouraging for us looking forward here is those areas we've had shortages around. We've been working very closely with the suppliers. We've demonstrated to those semi-suppliers continued progress week over week in terms of rate, and they're very leaned in on making sure that the constraints and line down situations we've dealt with over the last several weeks, we're going to put those behind us as we look at ramping into the remainder of this quarter and of course through the rest of the year. And a day doesn't go by where I'm not talking to the CEO or senior team of one of those key constrained suppliers. And I can say with confidence, and certainly if they're listening in, we appreciate their support. But I can say here with confidence that they are as leaned in as we'd hoped for. And I'd say it's a materially different situation than we had at the start of the year, where the suppliers were still trying to figure out whether or not we as a company were capable of producing and ramping. We've made it very clear through our performance that the plant is capable of running. And as I said, we hope to be running the plant on 2 shifts starting mid-year. And with that, of course, building line of sight around component allocation.
Okay, thank you. And then on the 10,000 orders you've received since the price change in March, at an ASP of $93,000, that seems a very rich mix. I guess it means that the vast majority is quad motor, max pack R1Ts or large pack R1Ss, given that price point. Were you surprised by that? Does it match the mix of the rest of the order book, albeit obviously at the older, lower prices? And do you expect to sustain that type of mix for future orders?
We see, just to clarify, there's definitely the high ASPs indicate a preference for the dual motor, as you called out, but also a preference for the quad motor. But also, just to clarify, the large pack, our middle-sized pack, makes up a vast majority of the configurations. So what we see is customers have a very high willingness to spend, and there's a lot of pricing power that these vehicles have and what we've built as a brand has. And that gives us a lot of confidence as we go into the next 6-12 months, understanding the inflationary environment that we're in, that there is significant pricing capability on these vehicles.
Thanks.
Thank you. Your next question comes from the line of Mark Delaney with Goldman Sachs. Your line is now open.
Yes, good afternoon, and thank you very much for taking the questions. The company is working on several new vehicle technologies. You spoke about LFP batteries, the Enduro motor, also the new network architecture, and you commented on how it's an important part of your long-term profitability objectives. Can you elaborate a bit more on how the development is going for some of these key technologies, and do you expect them to still happen on time?
Sure. As I mentioned before, Mark, we've on our LFP pack, this first goes into our commercial vans later this year. Along with that, the Enduro motor its first application is in the vans as well later this year. Both of those are well underway. In the case of the Enduro drive unit, we're putting that plant and that line in as we speak. So there's the lines being built, the plants being, the additions going into our facility. And it is on track. We're pushing very hard. We're very excited to get that into our vehicles late this year. And then following the introduction in the commercial van, both the LFP pack as well as our Enduro drive unit, as I said, with the Enduro being used in a dual motor setup, one in the front, one in the back, it also makes its way into the R1 product line.
That's helpful. For my second question, I'm hoping to better understand the opportunity in software and services, and it's an important part of your long-term opportunity, and I think a really interesting business opportunity for the industry. Can you speak more on how that's progressing with some of the early R1 owners and what kind of adoption you've seen on some of your offerings, such as your insurance product? Thank you.
We have seen strong take rates, especially around our offering from a financing as well as insurance perspective. And those are, as we know, we've had some questions as well around level of vertical integration. Those are two great examples of opportunities where we have partnered with strong third parties in the case of Chase and on the financing side, and then Nationwide on the insurance side, that allows us to build a very robust, data-driven insights into the business, and importantly, through some of those data-driven insights, allows us to continue to evolve the relationship that we have with our customer, and beyond, financing and insurance, are really excited to also offer a whole host of software-enabled services, and the FleetOS solution that we have with Amazon there is a great benchmark as we think about the capabilities that we're bringing to bear to help them manage that end-to-end fleet solution. And in the case of FleetOS, we're also able to ultimately leverage a number of the core digital commerce investments that we've made as a company from the commercial side of the house, and use those to think about our consumer experience as truly how do you manage a fleet of one. And so we're really leveraging that digital infrastructure and digital backbone within the business across both the consumer as well as the commercial side of the house. And as we've talked about in the past, the 65% long-term gross margin opportunity that our software and services side of the business delivers allows us to ultimately drive and increase margins rapidly over time as we think about the compounding effects that can deliver from our growing car park.
And your next question comes from the line of Ryan Brinkman with JP Morgan. Your line is now open.
Hi, thanks for taking my question. Relative to the 17 to 21% vehicle price increases implemented on March 1, I'm curious how much of the higher pricing was meant to offset, obviously higher battery metals costs or higher general inflation beyond your control, versus maybe higher other more company-specific costs such as product development expense, et cetera, and what has been the trend in cost both within and outside your control since the time that you revised pricing just prior to the last earnings call. And you discussed flexibility in your spending plans, and I appreciate your plentiful cash position too, but have there been any examples yet of reined in budget increases or anything like that?
Sure. So to address the first question, as we thought about the decision to increase prices, we both looked across the broader inflationary backdrop that we were seeing across our raw material costs, and beyond raw material costs, just looking at how inflation was playing, whether that was the cost of freight that we were seeing across the broader market and industry backdrop, as well as other increases that we were seeing more broadly from an inflationary perspective. In addition to looking at each of those factors, we also importantly benchmarked the value proposition that we were bringing to market and the core capability set that our vehicles represented to ensure we were truly bringing a compelling value proposition even at the higher prices that we were charging. And I think the momentum and acceleration of pre-orders that we've seen post that March 1st mark certainly emphasizes that equation is certainly still intact. And it's been amazing to see a lot of the network effects that we've seen where, in markets where we've been delivering more vehicles, we've also continued to see an acceleration of pre-orders, because truly our customers are our best salespeople out there in the market, giving their own test drives and in some cases actually reaching out to our customer experience center to ask them for how best to address their own friends' questions as they're, educating and really empowering and educating others about what the Rivian brand is and importantly, what that driving experience feels like within the market. So those are our key enablers for us. Importantly, we're also not standing still as we think about the priorities that we have in regard to our own cost attack initiatives as we think about our own cost of goods sold and both the commercial opportunities that we have as an organization, as well as a number of the engineering developments that again will ultimately be reducing the overall BOM costs and, as RJ mentioned, create a lot of those foundational systems that will power R2, which is, as you know, is our more affordably priced mid-size SUV that will be coming out as well, and will also benefit for all of these horizontal technology investments that will be coming to market with over the next 2 years.
Very helpful. Thank you.
Thank you. Your next question comes from the line of Vijay Rakesh with Mizuho. Please go ahead.
Yeah, hi, RJ and Claire. I saw you maintained the full year guide on production. So looks like to hit that, you probably have to double or triple your production run rate from here. And based on the fact that it looks like you'll be adding a second shift mid-year, does that imply that you're assuming all the supply constraints should get resolved by mid-year, by June, as you add the second shift there?
Yeah, our production lines are capable of producing at a significantly higher rate than what our supply chain is able to support today, as you said. But the guidance we provided fully encapsulates our expectations and confidence around the supply chain. I said this in the last call, and I want to make sure I say it again here. We are pushing our suppliers as hard as possible to do more than that. We would really like to unlock the full production capability of our plant, such that we can get more cars and more vehicles to our customers, given the significant demand backlog and given the excitement we have on both the consumer and the commercial side.
Thanks. And on the Amazon EDVs, I guess on the consumer side, you're able to adjust pricing based on the cost cost inflation there. Do you have the flexibility on the EDVs as well in terms of some flexibility with respect to commercial EV pricing, etc.? That's it. Thanks.
Sure. So as you think about the Amazon contract, it's a cost plus agreement. And so that embeds some of those overall inflationary metrics embedded within that contract. It's also important to note that as we think about the introduction of our LFP pack, as well as the introduction of our Enduro motors in the commercial van, those both are key enablers for significant cost down opportunities for Amazon. And so that gives us a lot of confidence in regard to the ongoing margins that we can earn from that contract.
And it's important to note that, well, as Claire said, while it's a cost plus contract, we do also have it structured such that we keep a portion of all the savings that we accomplish with things like our LFP pack, as well as the Enduro drive unit.
Great, thank you.
And that concludes our question and answer session for today. I will now turn the call back over to Mr. RJ Scaringe for closing remarks.
All right. Well, thank you everyone for joining the call. Enjoyed the discussion here and appreciate the questions from everyone that came in. Just in ending, I want to repeat a few things that came out through the course of the discussion. We couldn't be more confident in the path that lies ahead, and we as a leadership team are very focused on making sure we take the $17 billion in cash that we have, the 150,000 units of installed capacity, and the incredible demand we have from consumers, both on the consumer customers, both on the consumer side as well as with our partner Amazon, and taking all those core elements and ensuring we're positioning ourselves for significant growth over the coming years, but also focusing our capital deployment on ensuring that we launch R2 in 2025 and can do that with the cash that we have on hand. So as Claire said, and as I said, so that we are in the driver's seat in terms of our future growth. With that, we look forward to future discussions here and reporting continued progress as we work towards those goals. Thank you again for everyone for joining.
All right, guys. So that is
And
the
this concludes today's
Rivian
conference call.
earnings
Thank you
call.
all for participating.
That is the Rivian earnings call. Let me know if you're bullish or bearish on Rivian. We will be day trading live on stream for free tomorrow morning. We start at 6:30 Eastern. We stream until like 11:30 Eastern. And if you want to join us, we trade a $30,000 account with $120,000 in buying power live every day. We day trade the open actively. We trade Rivian sometimes. We trade all these big stocks, and we talk about the biggest news stories in the market. So hit the subscribe button, guys. Do it now. You know you want to. Bitcoin under 29,000. So kind of crazy drop for Bitcoin. Also, check out our deep dive into Luna. We did cover the big crazy drop that we've had in Luna in the last few days on our crypto channel. And so go give our crypto channel a subscribe. I'll consider it a favor of mine. If you appreciate free stock market content, listen, everything we do here is free. We don't sell anything. We don't charge for anything. We don't claim to be experts. We don't act like gurus. We give all of our stuff away for free. We don't claim to be experts. We don't charge a penny for any of our content. So hit the subscribe button. I posted the link to our crypto channel in the description of a link to our video on a deep dive on what happened with Luna and the Luna crash. We detail it fully in that video. It's about 20 minutes long. Check it out. Subscribe to the crypto channel. Hit the subscribe button here as well. We'll see you guys bright and early tomorrow morning. Hit the like button. We got 84 likes. I'm sad with those likes. We could get at least 100. Do it now. Good luck. Love you all. We'll see you guys tomorrow. Thanks for watching, team.